Well, hello everybody. Welcome to P.B.M. Vending. Today, I want to talk about how to improve your cash flow. Notice I didn't say increase your cash flow. I said improve your cash flow. And for the purposes of this video, I want to assume that your income and your outgo is equal every month, just to teach the concepts that I'm going to show you. I'm going to make some suggestions that anybody can do, whether you make $1,000 a month or $1 million a month. Okay. The first one that will help is look for discounts, like car insurance, as an example. Most car insurance places will let you pay by the month, but if you're able to pay it annually, you will save money. Mine happens to be 36 bucks a year that I save. But and I think the utilities is another one where it says if paid by this date, it's $50, and if you pay it by this date, it's $40. So look at all of your bills, and if you can find one that will give you a discount to pay it early, that will help with your cash flow, even if it's only $1 or $2. The next one I want to talk about is due dates. Now this sounds, remember when I said they were equal, your income and your outgo? What usually happens is most people's bills are due at, okay, so here's your income. And your bills are due at the first of the month. Okay, so you have a lot more bills than you have income. Then by the middle of the month, they're equal. And then by the end of the month, they're equal. And so throughout the month, as you add income, the difference becomes less and less. And you end up the month, and then you start it over the next month. But what if you took a piece of paper and you wrote down all of your bills and the due dates? Now let me give you an example. A mortgage payment typically is due on the first of the month. However, they give you 15 days grace period. So when I bought my little house for the ministry, I set it up to be taken automatically out of my checking account on the 10th of the month. Why the 10th? Well, because I figured there would be a couple of times during the year where there would be holidays or something would happen, and I didn't want a couple of days delay to make my bill late. I wanted to be on time all the time. But it gives me an extra 10 days in there to collect the rent. It helps the cash flow. So go through and do that. Now, if you're like most people, most of your bills will be due before the 10th of the month. So, one of the things that you can do is contact different companies, like a credit card company. I've done this a couple of times. You know, they want it due on whatever day they choose. So you call them up and you say, hey, this isn't working for me because of the way I get paid every month. Can we move it to the 21st of the month? And most of the times they're going to say, yeah, we're probably going to have to charge you, extra or a one-time fee or something. But now you've moved it from the 10th of the month to the 21st of the month. And I've got 2 credit cards that are due on the 21st of the month. It makes a whole lot of difference on your cash flow, because now instead of your cash flow doing this, now it's more like this, just by moving around your due dates. Now, the next one I want to talk about is related to that. So, does that mean you have to sit down 5 different times during the month to pay your bills? And this is a trick that I learned when I was an assistant credit manager. And this was a multi-million-dollar business. and they did not have to do this, but they did this to help their cash flow. So that means anybody, no matter how much money you make, you should be doing this. When you make your bills out, I still do mine by check. You look at the due date, again, like if it's due the 1st, but you have till the 15th, and you want it to get paid on the 10th, so what you have to do is you deduct, like I usually allow 5 days from the day I mail it to the day they receive it. Okay, 5 days. So if I want to pay it on the 10th, then I mail it on the 5th. So how do I remember that? In the bottom left-hand corner, I write the number 5. And I do that for all of my bills. So when you've got a stack of bills there, you've got one due on the 1st, the 7th, the 10th, the 15th, the 21st, and then you put them in numerical order, put them on your desk, and then when the 5th of the month comes around, you take the ones for the 5th and you throw them in the mail. Now, moving forward from digital, what you could do that with those. Instead of making all of your bills come out on the 1st, you make them come out a couple of days before they're actually due. As an example, when I did on the 10th, it's coming out automatically on the 10th. And if your utilities, and if you get like we talked earlier, if you're able to get a discount, then you make it so that it's paid a day before the discount. Okay. Again, going old school, another thing that I did to improve my cash flow, in my credit cards, I pay them off every month, and I put everything I've got that I can on them because I get cash back. However, that means that at the end of the month, I get a credit card bill for around $2,000. I don't make that much. So what I have to do throughout the month is I have to take a certain amount of cash out of my check each month and put it into an envelope. And then when the bill comes due, then I take the money out of the envelope, deposit it into my account. Why do I do that? Because that's a little bit each week out of my pay, instead of every month scurrying around trying to figure out how I'm going to come up with $2,000. Because I've taken a couple hundred each month, and now when the bill is due, it's there. What we're trying to do is not to eliminate bills, not to increase your cash flow. We're trying to make it a non-traumatic, non-event where it's as level as possible throughout the month and you still get all of your bills paid. Now, one more suggestion. In life, stuff happens. We know that. And no matter how hard you try, there will be times where your cash flow is just not going to cover your bills. You have a business expense. You have something goes wrong with your car. You have to buy a washer and dryer. I mean, something's going to happen. So how do you keep it level when life happens? And I discovered this quite by accident, again, when I bought that little house. But I got a line of credit for my checking account. And I have used that. And what that does is, so let's say you have a $500 something happened. And so you write the check for $500, your bank pays it, and now you owe the bank $500. Which, by the way, is better than having them pay it and you pay the $500 plus a fee for the check. That just irritated the crud out of me. But anyway, so now you owe the bank $500. Now you can pay that, $100 a week, $100 a month, but you can still keep it relatively level while you're paying off your other thing. Now, it does show on your credit bureau, but you're not paying 18 or 20% interest on a credit card. Okay? And if you get it at a credit union, I believe mine is running at 4% maybe. So, I mean, they're making a little bit of money, but they're not shooting me in the foot with the $25 per check deal. I'm keeping my cash flow level, and I'm getting my bills paid. So those are all things that you can do to try to improve your cash flow. Check your due dates. Try to spread those out throughout the month. Use the envelope method for saving a little bit of cash throughout the month to help with the big bill that occurs every month. Also, you should save to have an emergency fund. If you can't do the thing on your checking account, then you should definitely have an emergency fund anyway. Write the due dates on the outside of the envelope, or if you're going to pay digitally, have those taken out just the day before they are due. That way your credit rating still stays intact, but you're spreading it out throughout the month. Get a line of credit for your checking account, and look for discounts on your bills. Well, those are the suggestions that I had for how to improve your cash flow. Well, you guys have a great week, and happy vending!